While the market has been going down for the last few months, it's actually been not too bad to be a day trader if you know what you're doing. And I'm going to talk about some of the key things in this week's video. Plus, I will analyze the overall markets as I always do, give you a sense of whether the market has bottomed or if there is more of a correction to come. And then finally, I'll look at the day trade of the week on NRXP. All right, so maybe you aspire to be a day trader. Many do. Millions of new traders came in after COVID because people had time and they needed something to do to make money. Well, the problem is when there's no barrier to entry or very few barriers to entry, anyone can become a trader, and you get a lot of people that don't really know what they're doing. Now, the market was very hot in 2020 as all of that new money pushed the market higher, and so it was pretty easy. Even a monkey throwing a dart at a board could have done well. The true test of whether you are really a day trader comes when the market cools off and you find out if you have the tools, the strategies, the knowledge to do well in a market that is not hot. And so when we talk about what it takes to be a good trader, that's the true test. How well do you do when the market isn't helping you? Now, in the last few months, the market's been moving lower, and yet every day my strategies are able to find a few stocks that are worth trading. I'm going to show you an example in just a moment. And if you apply good management of emotion, good risk management, and you've got a strategy that is effective, you can pull money out of the market almost every day. So let's take a look at an example of one now. This is a stock from today when I'm doing this video on Friday. There's a couple things I want you to notice. The first is that the volume traded on this day is much higher than the previous day. That tells me that the stock is in play, that there's a crowd gathering. It's a sign of alpha, and I only trade alpha stocks. I don't trade the same stocks every day. It's a fool's game to do that. I like to trade the stocks that are in the market's focus because there's a crowd there. That means emotion. That means people make mistakes. They send the stock up too high, and that's how we can take advantage of these kind of stocks. Now, then the other thing you'll notice on my screen is I've got all these dots and lines, and they're things that you won't find in other technical analysis programs because I've written my own indicators. Remember, one of the things we have to have is an edge. And if you do what everyone else is doing, then you're going to get what everyone else gets, which is average. If you want to beat the market, you have to do something that most people are not doing. And so that's why I don't use normal technical analysis indicators or anything really normal. I've written my own based on simple concepts, and using those is what gives me an edge because I can catch stocks before they make those big moves. So if we look at SINT, there was a valid entry there, there was a valid entry here, and there was a valid one there. You'll notice that it all comes on candles, bars, where there's a little dot, and those dots are things called message candles and action candles. These things are all taught in the active trader program that we have at Stockscores, and these tools are available to my students, again, giving them and me an edge to take advantage of the crowd. Now, the last thing I want to emphasize is emotional control. One of the biggest failings of most new traders is the fear of missing out, chasing stocks higher, taking marginal entries. And so if we go back to our chart, you never want to buy a stock when it's run away from its trend line. So there's your trend line. There was lots and lots of people buying up here. They were buying because they had the fear of missing out. It's a terrible thing to trading, and it's something that's very common. In a strong market, in a hot market, you get away with it because the stock just keeps going up and up and up because of the euphoria in the market. In this market, you don't have that kind of euphoria. So you have to buy stocks when they start going up, when they break out of the right patterns, when they do something what I look for, which is an action candle or a message candle. But I never want to chase stocks when they've run away from their trend line. I want to buy them when they start to go up. There's a break from an ascending triangle pattern with an action candle on a stock that's very abnormal. All of these things are taught, as again, I've said on my Stockscores education. You go to the Stockscores website and learn more about that. And these are things that we watch every day in the Active Trader live service that I offer, where I talk people through the trades I teach every day and that sort of thing. So if you want to learn from me, that's an option. If you want to learn on your own, make sure that you have an edge, that you have the right tools, and most importantly, that you have emotional control. All right, let's get into this week's market analysis. We've had a pretty good bounce back this week, and that started to occur over the last month or so. We started to see rising bottoms. So what we're going to do now is just jump into the Stockscores charts. And what you see on screen right now is the S&P 500 ETF, SPY, but this is a fairly short-term chart. This is a 30-day, 60-minute. Notice that we had some strong selling, and then we started to build rising bottoms. Rising bottoms are a sign of investor optimism. It means the buyers are taking control. And that started a few weeks ago. And then we had the Fed decision on Wednesday, and it broke us out from a little pattern here, from a rising bottom, and that started this nice run into the end of the week. But what that also did, and this is very important, is it broke a downward trend line on the longer term chart. So here is our longer term downward trend line. We've broken that from a rising bottom on the daily that started this week. I mean, it actually started last week as well, but this is kind of the confirming signal this week. And then if we go to the weekly chart, you can see that we are coming up to the downward trend line on the weekly. So this is the last barrier that we have to cross. The short-term charts have turned positive. That weekly long-term chart, not quite there yet, but it's getting there. And so if we can, I expect we'll stall here for a little bit, but if we can break through that, I think the market's actually going to start to move higher. Now remember, there's still lots of things to be concerned about in the market, and so it's quite possible that we will not break that downward trend line, that we could roll over and move lower. So what do you think? Are we going to break higher or lower in the next 2 weeks? Give me your thoughts and leave them in the comments section. I'm curious to see what the masses of you think is going to happen. All right, let's jump into the Canadian market there. T.XIU is the symbol. And again, some strength in the Canadian market, just like the US. But here, you didn't quite get the same good break through the downward trend line. We're just tickling through it, but we come from a low point. We don't come from a rising bottom. So I think there's a good chance that the Canadian market will pull back, make a rising bottom, hopefully, and then move higher. So a little bit more caution warranted on the Canadian market because of that. Let's just take a look at the 3-year to get that big picture, and you can see that we still need to break that downward trend line. Hasn't happened yet, but we're getting better as time progresses. All right, let's take a look at some of the commodities. We'll take a look at USO first, which represents oil. And here you can see that we've had a little bit of stability the last 2 weeks. That's a good thing, because if we look at that 3-year chart, you can see that we have this long-term upward trend line in oil, and then we have the more steep one that was broken. I think it's very possible that we could pull all the way back to this, but if we can hold here, so call it $70 on USO, if we can hold that zone and then start to move up here, I think we may just go into a sideways stable pattern, which, although it's not an upward trend, it would allow energy stocks to continue to do well from a profitability standpoint because oil prices are high. If we start to break down, if we start to build falling tops and ultimately break this longer term upward trend line, then I think the party is over in oil. I do not see that yet. I think the party is still on, just taking a little bit of a breather, and that's healthy. Let's jump over to gold. And gold, you can see, had a little bit of a bounce back the last 3 or 4 days, but in the context of this downward trend line, we're still below it. And therefore, I would not get too optimistic about gold yet. It will need to build a rising bottom and then break that downward trend line before we can get real optimistic there. Let's take a look at some of the currencies. We'll start off with UUP, which represents the US dollar. You can see that we've had some weakness the last 2 weeks, and that's one of the reasons gold has been able to find some support, but that upward trend line is still in place. We ran away from it. What's our rule that we talk about every time this happens? When you run away from the trend line, you pull back. When you run away, you pull back. Well, we ran away. Now we're pulling back. It's normal. It's healthy. If we get back to that upward trend line and bounce, then the trend continues. If instead we break down through it, well, then we're going to switch from being bearish, or pardon me, bullish on the US dollar to being neutral or bearish. Let's take a look at the Canadian dollar. I don't analyze this one very often, but I know we have lots of Canadians watching the videos, and despite the strength in oil, you can see that the Canadian dollar hasn't done all that well, and that's unusual because usually the Canadian dollar is closely correlated to oil. Well, it's been more the case that there's been a flight to quality, a flight to the US dollar as there's been turmoil around the world, and the Canadian dollar has sort of been lagging because of that exceptional strength in the US dollar. But it's not terrible. We're in this downward sloping channel. If we could break that downward trend line, we could start to move up. I think right now it's just sort of drifting lower. And if you're traveling into the US and you're a Canadian, well, it's a little more expensive, but it's not too bad compared to what other countries are experiencing. Like the euro has really underperformed with the US dollar. All right, let's take a look at Gbtc. For those that like crypto, this represents Bitcoin. And you can see that we're looking at about 6 weeks of sideways trading in Bitcoin. So it's trying to make a bottom. I've talked in many weeks and recently that $10 zone on Gbtc is support, and we haven't hit that. We're close to it, but we're starting to build a little rising bottom there. And if we could break higher here, breaking this downward trend line, which we've already done, that would be a good sign for Bitcoin. Hasn't happened. That's what you want to watch for. I would not get optimistic about crypto until you can break through that resistance level from a rising bottom. We've built the rising bottom. We've broken the downward trend in the short term. We still have some work to do. Let's just take a look at the 3-year weekly to give you some longer term context, because even if we break that, if we were to start to do this, you're still facing this long-term downward trend line that may provide some resistance. So I don't want to overstate it. I'm still pretty bearish on cryptocurrencies, but they look better today than they did 3 weeks ago. All right, let's take a look at interest rates. TBT is what I like to look at for that. If this goes up, interest rates are going up, and you can see that the upward trend line is intact. We're right at it right now. We ran away from it. We're pulling back. That's been supportive for the stock market, but are we going to break down through this line, or are we going to bounce off of it and continue higher? Really critical point for interest rates. The comments from the Fed made some people think that maybe there isn't going to be a lot more interest rate raises by the US Federal Reserve. Is that going to happen? The markets sort of priced that in already, some question about that. Really have to watch this chart closely the next couple of weeks, because if we break this upward trend line, if we break this upward trend line, that's a clue that the interest rates are going to start to normalize and come back a bit. Of course, governments don't want inflation. They're trying to curb it with higher interest rates. If inflation is starting to come down again, then I think they'll let interest rates come down as well. But of course, if we continue to have inflation and that sort of thing, you're going to see maybe a bounce off of this line. So that's why I say let's watch this. The charts always lead the news. So if you're waiting for the news to come out and read about it, you're too late. That's being a dinosaur. You have to watch the market. Lots of smart people, lots of money predicts these things long before you ever hear about it in the media. All right. Well, that's my analysis of the markets. Let's just jump back in here and take a look at my ratings for this week. US stocks, long-term neutral, short-term bullish. We had a good little bounce back. Canadian stocks, same rating, although I would say the Canadian market looks a little bit less quality than the US. Gold, I remain bearish long-term, but neutral short-term. It is trying to stabilize. Oil, bullish long-term. We are still in an upward trend. Neutral short-term as we are getting some profit taking in oil. US dollar, neutral on both time frames. We've pulled back. We need to hold that long-term upward trend line. We're very close on that, so it's a risky point for the US dollar. Bitcoin, long-term bearish, but upgraded to neutral short-term. And then interest rates, again, long-term neutral, because again, we're testing that upward trend line. And in the short term, we've had some selling pressure in, well, not selling pressure, but movement down in interest rates. And so that is bearish. All right, now I'm going to switch gears and go back to the day trading, and we'll look at the day trade of the week, a stock that I highlighted in my active live service early this morning in the first few minutes of the trading day. This is NRXP, and one of my strategies is something I call a day trader strategy. What it looks for is a 2-minute action candle. So looking at this 2-minute chart here, you can see there's little pink dots on some of these bars. I'll draw that in yellow so it's a little easier to see. And those pink dots represent, those pink dots represent abnormal price and volume action. Well, we had one right at the open there, 9:34 Eastern time when that occurred, and it surprised the market. The stock, nobody cared about it. My algorithm searches through every stock that trades in the US and it looks for an abnormal buying pressure. And the computer does most of the work. We get a short list on Active Live to watch, and then we can jump in when that happens. Well, that happened on NRXP at 9:34 and had a nice gain. Let's look at the economics of that. For every $100 of risk, we would buy 100 shares. So $100 of risk, you buy, 2,490 shares. That's $1,569 of capital. It's a relatively cheap stock. You can't margin stocks under $3, so margin is not applicable. But the sell sign was right over in here when we started to break down from a falling top right here. And that meant that the reward for risk on this trade was 7.5. So if you risked $100, then your profit was $750. If you risked $1,000, then your profit was $7,500. That's a 47% return on the capital invested on a hold that was a few hours. So a pretty decent little trade. And there was a lot of good trades on Friday. It makes me think that the market is improving. We're getting that summer rally. And I think August could be better, not only for day traders, but also swing and position traders as the market is trying to stabilize. We'll keep a look at the charts every week. Make sure you're subscribed because I do these videos every week. They're free. I didn't do one last week because I was on vacation, but back to normal now. Hope you've enjoyed it. If so, click the like button, subscribe to the channel, and most importantly, trade well.